Okay, the next filing we have is that of MEMX LLC, which Citadel and friends have a large stake in. This is a members exchange filing, and this is also filed and effective immediate. It will be effective as of the 13th. Now, this one here, the purpose of this, let's see if they have any background. Nope. Okay, the purpose of this one is to amend the fee schedule. And first note, whenever you see filings with fee scheduling, anything fee related, they're gonna make mention of the fragmented market. They're going to make mention of how much market share they have, and they're also going to reiterate that they operate in a highly competitive market, all that nonsense. So anyways, the purpose of this proposed rule change is to amend the fee schedule to adopt reduced fees for executions of pegged orders, which if you want to know what a pegged order is, you're going to have to look it up because they're referring me to another exchange rule. I don't want to go down that rabbit hole and confuse people. So they're adopting a reduced fee for the execution of pegged orders with a midpoint peg instruction as a time in force instruction of IOC, which is immediate or cancel, or FOC, F-O-K. I haven't seen that one before, so I'll have to look into that. And these will execute at the midpoint of the National Best Bid and Offer, or the NBBO. And then 2, they're going to modify the required criteria under the liquidity provision, tiers 1 and 2. And number 3, they're going to allow affiliated members to aggregate their quoting activity for purposes of the exchange's displayed liquidity incentive, or DLI, tiers with prior notice to the exchange, each as further described below. So what they're doing basically is they're basically incentivizing participants to use their exchange for execution and liquidity. And this is when they start bringing up the fragmented market and things like that. So the exchange first notes that it operates in a highly competitive market in which market participants can readily direct order flow to competing venues if they deem fee levels at a particular venue to be excessive or incentives to be insufficient. More specifically, the exchange is only one of 16 registered equities exchanges, as well as a number of alternatives trading systems and other off-exchange venues to which market participants may direct their order flow. Based on publicly available information, no single registered equities exchange currently has more than approximately 15.5% of the total market share of executed volume of equities trading. Thus, in such a low, concentrated, and highly competitive market, no single equities exchange possesses significant pricing power in the execution of order flow, and the exchange currently represents approximately 3% of the overall market share. So MEMX is very, very small as far as their market share. So this is just them filing a filing to incentivize more participants to use their exchange, and they're doing this by reducing fees. And they're incentivizing members, to say right here, to submit additional liquidity, removing orders designed to execute at the midpoint, and yeah, efficiency and market share. Fragmented market, these happen very often. Fee-related filings are very common, and typically incentivized related for the members. So anyways, that's all for this one.